All right, folks. There have been some bumps in the road lately, with this Google. So I want to bring in now Albion Financial Group CIO, also chief economist, Jason Ware. So, Jason, the stock caught its stride. Doing extraordinarily well last year. And then the last time they reported, it did extraordinarily well. But now there's some question marks about it, right? Of course, after hitting that all-time high in May, we pulled back here a little bit. Just want to talk about what you're expecting, what you're looking for, top and bottom lines. Let's begin there.
Good to be with you, Charles, as always. Look, I think the big things tonight are going to be obviously cloud revenue, cloud growth, cloud margins, and then CapEx spending, both what they spent in the quarter and their outlook for spending in the quarters ahead. Those are important as it relates to Google's core business, of course, that is hyperscale, the cloud business, which is benefiting from AI workloads, but also as it relates to the broader AI trade, how much they're going to spend going forward is of great importance. So all of those things will be more critical to the Google story versus whether they beat by 5 cents or 10 cents. To be clear, we think they'll do $3 or better in earnings tonight.
$3 or better. Now, okay, on the spending side, is there a particular number? Do we need to see them keep the pace that they've kept in the past?
Yeah, great question. So on the spending side, the expectations are around $45 billion in Q2 CapEx. I think it'll be closer to 50, and then more important than that will be their outlook. The street is still expecting around $185 billion for the full year 2026. I think if they come in around there, the AI trade is fine. I think if we get closer to 200 in terms of their outlook, then it's going to be all systems go. I suspect it'll be a slight increase in their outlook for CapEx.
So with that in mind, how worried are you about how they're getting this money, right? Of course, all these companies have used up a lot of their free cash flow. They're doing debt offerings. They had the $80 billion equity offering. Does that bother you that maybe there's nowhere else to even find the extra cash they're looking for?
No, it doesn't bother us. We have to remember that Google does something on the order of, 180 to 200 billion in operating cash flow. So they are well financed in terms of their ability to underwrite their CapEx spending. While it's true that they have been tapping the capital markets, not just Google, but Amazon and others have been tapping the capital markets, they're doing that not out of need, but doing that out of financial flexibility and being smart with their capital structure. Right. We celebrate it. So I think they've got access to cheap capital. They've got tons of operating cash flow. Yes, that has suppressed their free cash flow, but I think that'll pass as we get closer to end of decade. You still want to own this business.
So with that in mind, last year they stumbled out the gate. All of a sudden, they had their own AI offering, Gemini, which the street fell in love with. All of a sudden, they had their own TPU, their own chip thing. But now they've had 3 delays on Gemini 3.5. Now this morning, I don't know if this made us feel better, but 3 offerings, but these are much less powerful AI offerings. At some point, do they have to get back into that AI race?
They are in the race. There's no doubt. As I think about who's got the best quote unquote full stack, which is what Wall Street's talking about, the right. Full stack approach to AI, Google's about as good as it gets. We have to remember the starting point matters. You mentioned a year plus ago, the stock was trading at 140 and the whole quote unquote 10 blue links, the search business was supposedly dead. The stock was trading at 17 times earnings. It never should have been at 17. The stock went up 180% over the last 15 months and the PE went north of 30. So I think we're kind of back at a reset in the mid 20s where it should be. Meanwhile, their AI business still looks very good. And right. I think their chip business, their TPU piece is actually a competitive advantage for them. So we still like the setup for Google.
I got 30 seconds to get, you've given us Texas Instruments in the past. It's made a huge move, but it's been sideways for a few months. They report as well. And it could be, something of a proxy for the semiconductors overall. How are you feeling?
Yeah, I think they're going to report some good numbers. And this is the opposite story of the Mag 7, where their free cash flow is actually inflecting up. They've just got done with a big investment cycle in terms of building out plants, chip plants. So we're seeing free cash flow going up, but I think it's a great business to own long term. It pays a nice dividend and it's growing well.
Wow, that's a good 1-2 punch. Hey, Jason, thanks a lot, my friend. Appreciate it.
Of course. Thank you.